Okay, we have a quorum, and thank you all for coming over on short notice. I would ask Chairman Nix if he would to open us up in prayer. What number are you? 24. 24.
Let's pray. Father, we thank you for this beautiful day, and we thank you for the opportunity to serve the people of Georgia. Lord, we just ask now that you would bless us, give us the wisdom that we need to understand the concepts before us, Lord, and the will to do the thing that would be pleasing to you. In Christ's name, amen.
Thank you, Preacher. We're here. Mr. Williams, Representative Williamson is presenting House Bill 781. For those of you who don't know, Bo Fears, Banks Counsel, Banking Department Counsel. He will be with him in the event that any technical questions need to be answered. I do plan on taking a vote on this afternoon, but we don't want to rush. We'll take all the time we need, so I don't want anybody to feel rushed. So I'll go ahead, and without any further ado, let me see if I can. I believe
it's already on, I think.
So, I think that's it. Okay, I think you're ready to go.
All right, thank
Proceed,
you, Mr. Chairman. Members of the committee, thank you for being flexible and gathering. The call was for the earlier of adjournment or 2 p.m. and like most of you had 2 p.m. on the calendars, but thank you for coming on where we can take up this important piece of legislation. It is the annual housekeeping bill for the Department of Banking and Finance. This is the 6th year that I've carried this bill, and it is by far the easiest. It's gotten easier every year as we modernized and streamlined our banking code in Georgia. The whole efforts to make us more competitive, update nomenclature, make processes easier to understand, more transparency for the customers of the financial institutions in Georgia. And I think we've done a great job as a General Assembly of doing that. This is truly a bipartisan effort every year, and it's been a joy of mine to be able to wade into 20-page bills and make a difference in a way that I've sort of been trained to do. So with that being said, in respect of Chairman Marcy's instructions that we do be deliberative on it, I thought I'd take it just section by section because it is a vast amount of words on this paper, but I think if we break it down by section, I could tell you what each section's intent is to do, and then you can interrupt me and we can have questions at any time that the committee members might like. So if that order's all right with you, Mr. Chairman, I'll just start with section 1.
If anybody has questions, just press the button and we'll decide if we,
So in section 1 in particular, draw your attention to lines 32 through 45. Last year, we permitted the department to conduct a criminal background check on directors and officers of any institution that was seeking to acquire a state-chartered trust company. And this language, all it's going to do is it's going to clarify that the scope of the background authority is only limited to the individuals where there's actually a change in the controlling influence of the institution. So we're not having to. It's just targeted where institutions changed hands basically, and then the new players in that space would have the background checks. So section 2, lines 50 to 57. If y'all recall, during the horrific Great Recession, any de novo bank prior to that time, de novo banks were becoming profitable typically within 3 to 5 years. They'd do the original business plan. That was what every one of the new banks was saying, we'll be profitable in 3 to 5. And by far, most of them were. That all changed with the Great Recession, and we all know what happened to a lot of our state-chartered banks in Georgia. But this legislation would recognize the fact that it's a longer payback to become cumulatively net profitable, 7 to 10 years now. But this legislation would allow those institutions that are meeting their benchmarks, that are operating in a safe, sound, and efficient manner, that do have justifiable cash flow, can return dividends to their investors throughout a longer period of time, not just only when they become cumulatively profitable. Section 3 This gives the department the discretion to waive or modify the Georgia residency requirements as it relates to members of the board of directors. As we all know, banks are expanding their footprint across multiple states. This would allow more flexibility in, for example, a Georgia domicile bank to have a director that comes from another state that's a big part of their economic footprint. We can think of numerous examples of banks that would fit. So, I would argue that the shareholders are better served that way when there's a representation of a board where a lot of the revenues is coming from. It could be the Carolinas, for example, for a Georgia-based bank. Sure.
What's your number, Penny? Excuse me, Chairman Houston.
Now, we're just giving them the right to waive just that one section. We're not,
It gives them the.
and they have to, okay, about the directors, that they can live somewhere else. And, I'd like to keep everybody, a U.S. citizen.
Oh, I didn't think about that part.
Yeah, it's limited to subsection B, which deals with residents in Georgia or residing within 40 miles. It does not apply to the residence requirement of the United States. Oh, yeah. I would
It
say
looks
this-
like
it
they
does.
can-
I apologize, yeah, the department has no interest in,
Well, I know, but 10 years from now, we aren't gonna be here,
yes, ma'am.
so I'd like to limit to a certain thing.
Okay.
I don't know how everybody else feels. But if this thing's, that they could, the way it's written now, they can change anything in this subsection. Yet we're just pointing out that they can change, where they live, but I'd like for them to be a United States citizen.
Frankly, Madam Chair, I had not thought about that aspect. I don't disagree with you at all. As I explained, my emphasis was that you want the economic interests of the shareholders, have the flexibility for the board to be expanded throughout the United States. So I don't have any objection at all to clarifying that.
I mean, I don't
Good-
want somebody down there in the Cayman Islands being on the board.
Good, that's a good question. All right, so, section,
Is that Representative Frazier?
For clarification, thank you, Mr. Chairman. So the 75% of the directors shall be citizens of the United States, unless the majority. So actually, we're saying the other 25% is from where?
what line is it? 64.
But the way it reads it, they can change this, the directors can change it. I mean, the banking department can change it.
This implies right now that you can be a non-US citizen.
Just for clarification, that's it.
Yeah.
Is this by the United States guideline?
So as I understand it, so it's currently 75% of the directors have to be citizens of the United States.
United
And-
States.
And then a majority have to either reside in Georgia or be within 40.
Miles.
40 miles of the banking location.
Yes.
Now, what the change as drafted would permit, the department may waive or modify any of the requirements in subsection B. Our intent was really residents of Georgia, but, how it's drafted, we could waive the requirement for 75% of the directors being citizens of the United States. So then potentially 50% of the directors could be outside of the United States. And I think that is Representative Houston's comment.
You could waive it and 75 could be outside the United States.
Absolutely. And obviously, that's not the department's intent, but that is a outstanding point. Maybe a potential change would be requirements of subsection B1, because then you're talking solely on residents in Georgia. I don't know if that resolves your concerns or not.
I'm not an attorney, I'm just,
Okay, well, why don't you, I could go through some sections of the bill, if you could come up with I think, and I appreciate Representative Houston and Representative Frazier's good, that's a good catch, and maybe you could come up
Just add
with,
that right there.
So
Subsection
is it 60?
Well, once we go through and we
Yeah.
get through with the bill, then there'll be an opportunity if, we want to amend this language, then we can do that. So, the members that have the concerns or would like to see the bill amended, then there'll be a proper time to make a motion to do that.
Thank you, Mr. Chairman.
I think we've got another question here. Who is?
A quick one. Yes, it's me. Thank you, Mr. Chair.
Representative
Just
Marion.
clarification. 75%. Give me an example of the other 25% of directors. Where are they coming from?
It could be a Spanish bank buying into a footprint
Okay.
into the U.S., Santander. It could be Barclays out of London. And again, I had not thought about that. I was just thinking about the regional the representation at a board level. And I gave you the illustration of the Carolinas.
So foreign banks that have presence in the United States, just for example.
Oh, absolutely.
Yeah.
And so, kind of step back from the department's perspective, I am fairly certain that at our board, at the state chartered banks, 100% of our board members are U.S. citizens. Just, I think that is the reality, how it plays out, which is probably why I didn't think of Representative Houston's concern. But there are foreign banks that can have a license and permit under the Georgia Code that contemplates those international banking, and that would probably play into this consideration.
Okay.
When you say play in this consideration, you say that would prevent them from having the board members that they wanted.
That's probably.
If it was all United States citizens, if we amended it to say that.
Correct, correct. That's probably why it was drafted that way many years ago, to allow for international bank agencies to have a presence here in the state of Georgia.
Good question.
Okay, so we'll have to, determine if it's more or less that we're worried about United States citizens, or we're worrying about having the banking department having the ability to
Attract.
change these on their own. We'll get to that. Okay. That's all. Okay. Go ahead and proceed.
So, the rest in section 4, our current code provides that a trust company can only be acquired by a trust company, a non-depository institution. This is our language, proposed cleanup language would permit a bank to acquire a trust company, but only if the bank is the surviving entity. So there could be a merger between a bank and a trust company, and the trust company be the surviving entity, because that would leave the depositors without the necessary FDIC insurance. So, and there's many examples of banks in Georgia that are depository institutions that happen to have trust operations as well. Section 5 says expressly provides that a Georgia State Chartered Bank can open up a representative office out of state, so long as the activities performed at that representative office. Georgia Bank could have an office in Utah, for example, but it'd have to be operating under the laws of the state of Utah, as well as the banking department of Georgia. So it's not going to prohibit them in the interest of the bank to have out-of-state presence. They've got to follow the laws of that state. Section 6 eliminates the requirement that a bank file an annual registration with the department if it is operating a representative office, and replaces it with a registration requirement when the representative office is first opened and notification when the representative office is closed. And typically, this isn't depository. No depositor. What we're always worried about is depositors' money, and that really is just there's no exposure there at a representative office. Section 7. This language is going to reduce the period of time for the department to review a branch application from 90 days to 30 days. Again, things are much more efficient now. Analysis can be done. Everything's electronic, so there's no reason in dragging it out for review of a branch application in today's new economy. Additionally, it's going to remove some unnecessary language. It just cleans that up. Deletes language indicating that the department can waive the publication requirement, as there is no publication requirement for branches, as well as removing language that appears to be tied to the old unit banking limitation. So again, just streamline the way business is done today. Section 8 provides that a bank does not need to obtain approval from the department to open up a drop box. This is basically referred to as a night depository in the current statute. It's automatically approved upon extension of the bank. It also removes the reference to an ATM operating operated by a credit union, since the standalone credit union extension law, which includes ATMs, is proposed in section 12 of the bill. And I failed to mention that the oversight of the Department of Banking and Finance, this bill is touching banks, credit unions, mortgage bankers, money transmitters, and I'm missing one.
Check cashers.
Yeah, check cashers. And this language comes with the full agreement of everybody operating all those spaces. There've been no objections. They've been vetted by their attorneys. So this is nothing surprising to any of the regulated entities. And I always looked over to my fellow representative Gloria Frazier, who's going to always have the credit unions near and dear to her heart. So they are in agreement with this. I thought I'd touch on that. Section 12 provides that certain extensions of credit unions, I'm sorry, did I skip 9? I'm sorry. I didn't. So I'm right here. I apologize. Section 9 eliminates the requirement that an out-of-state bank notify the department prior to establishing the branch, as the department does not regulate out-of-state banks. That's just common sense. Section 10, last year we enacted legislation revising the name of the supervisory committee to the audit committee for credit unions, and this was a code section was missed last session. So audit committee the terminology audit committee better represents what that committee's doing, is auditing, not just supervising. And again, that language comes with blessings of the credit union operators. Section 11, the proposed change revises the legal lending limit formula for credit unions. The current calculation is sort of an unusual formula that's tied to deposits, which is not a real reflection of because that just means how many dollars they have. It doesn't really get back to how much capital, how much cushion, if you will, they have. So this would limit the, or just reformulates the legal lending limit. That's going to be based on, ties the legal lending limit to the net worth of the credit unions, and it's just a much simpler formula for the credit union officers to follow, much simpler for the department to audit. And again, that comes with the full agreement and blessings of the credit unions. We went through something similar to that on the banks in a couple of iterations back of our code. And that was actually passed in the 2017 session for banks. Section 12 provides that certain extensions of credit unions, such as ATMs, which are cash dispensing machines, night depositories, and point-of-sale terminals, are authorized and do not need to have express approval by the department. So a bank or credit union can put an ATM basically wherever they want to. Substantively, this language mirrors the requirements in the extension provision related to banks. So everybody's on the equal playing field there. Section 13, the language revises the terminology from subsidiary office to branch office for credit unions. Again, just keeping everything consistent. Nobody calls the sister or the credit union location in the next county a subsidiary. They call it the branch of the credit union, as we do branches of banks. And again, that allows with how the industry and consumers refer to the location. We're going to sort of bounce back and forth between Section 14 and Section 20, which, to draw your attention to lines 492 through 498 and lines 550 through 557. And we're going to talk about money service businesses and mortgage companies. A surety must give the department, a surety insurance product, if you will. It's really a surety bond is the better word. Surety must give the department notice of a bond cancellation at least 30 days prior to the cancellation. This revision provides that the notice must be provided electronically, and again, we're operating in the new economy, not snail mail, so that there's not any unnecessary delay in the department receiving notification of the bond cancellation. So whenever a bond's canceled, that could put depositors' funds at risk, or in this case, money service business wouldn't be depositors, but people's money's still being handled, and we don't want to put that unnecessarily at risk. So the quicker the Department of Banking and Finance can basically swoop in and get a cease and desist if they have to, or make sure that the necessary surety bond is in place to protect consumers. This is, again, just sort of a consumer protection enhancement. Sections 15, 17, and 21. Again, for money service businesses and mortgage companies, it's going to change the reference from license number to unique identifier number to align with the defined term in the code. Do you want to take a minute and explain exactly what that's doing?
Sure. So right now, if you are licensed as a money service business or a mortgage company by the department, you have a license number from the department, as well as a number that's been assigned by the nationwide multi-state licensing system and registry. For entities that operate in multiple states, the NMLS number lets the other states and consumers track them across states. It's kind of a ubiquitous number that everyone in the industry uses. So now what the department is suggesting is that the NMLS number be used to identify licensees as opposed to license numbers.
All right, so Section 18, we're going to eliminate the requirement that a mortgage broker headquartered out of state have a physical place of business in Georgia if the broker's home state requires that it have a physical place of business in its home state.
Where are you at right now?
Section 18. So this line's, I'm sorry, I apologize, I skipped 16 again. Demetrius, Representative Douglas, you need to be a better seatmate. I'm sorry, I'm going to go back to 16 and actually cross-references Section 23 as well. So that's beginning at line 509 through 516, lines 598 through 622. For both money service businesses and mortgage companies, it's going to reduce the period of time that a cease and desist order becomes final for failure to have that surety bond to protect consumers. That's going to go from 30 days to 20 days. It ties back into what I was talking about. When a surety bond's canceled, then a cease and desist, if something doesn't get fixed very quickly, there's got to be a cease and desist, or otherwise consumers' monies are at risk. And this just, again, works hand in hand to protect the consumer with a quicker notice to the Department of Banking and Finance.
We don't have a current situation going on. We're just making sure that we're prepared if there is. Are we reacting to something that's happened here?
We haven't had a negative situation yet, but what we've noticed is that we have a gap period occasionally where there's no kind of coverage, where an entity can still be licensed, but not, and so we perceive that there's the potential for harm, and we're trying to shut that down.
All right. Section 18 begins at line 528 through 532. It's going to eliminate the requirement that a mortgage broker headquartered out of state have a physical place of business in Georgia if the broker's home state requires that it have a physical place of business in its home state. And that's because in light of how many mortgage-related services are delivered electronically, and we can all think about the way that mortgages are marketed nowadays. So again, new economy, new ways of doing business. Section 19, lines 538 through 545, it removes language related to the notification of change in control of ultimate equitable ownership as the treatment of change in control for ultimate equitable owners as it's fully addressed in OCGA 7-1-1008. And I'm going to defer to Attorney Fears to help us better understand that change.
So there's potentially some inconsistency in the code. It appears here that a change can be approved, a change of control can be approved after the fact. However, the other code section, 7-1-1008, provides that the change in control must be a prior approval before the change of control, which is consistent with how we treat other regulated entities.
All right, in section 22, it's going to, again, eliminate the requirement that advertisements for mortgage companies, and we've all heard them, the mortgage company comes on and you hear this real fast talking at the end of it. So it's going to eliminate the requirement that advertisements for mortgage companies list the company's license number, because now we're going to this unique identifier, which is going to be contained on all advertisements, and it's going to disclose, which is going to be disclosed, because it was issued by the Nationwide Multi-State License System and Registry. This
The
puts
MLS number you were talking about earlier.
Exactly, NMLS number, which makes it much easier for the consumer to get back to the, in this case, it'd be the Department of Banking and Finance in Georgia. It would be the regulated institution. So if there's a problem, they go back through that pathway back to the DBF, puts them, making them aware of it much more quickly, and they can respond much more quickly on behalf of the consumers of the state of Georgia. I can't really think anything else on that. Section 24, this change reflects the changes in the citation numbers to certain federal laws and regulations. And if you don't mind, if you could clarify what that is as well.
Let me, I think Representative Fraser had a question
sorry.
on the last section. I know I didn't see it on the screen.
Thank you, Mr. Chairman. I'm not gonna remember these questions all the way at the end.
Well,
I really don't have a question, I just have a comment to my colleague. Representative Williamson, you mentioned all that little fast talking at the end of at the end of the advertisements, because they talk real fast for like 15 seconds about if you don't have this penalties and all of that. So are you saying that identifier number has to be listed or has to be said during this advertisement, or it has to be listed somewhere on that ad?
Yes, so I think, if you think about ads differently, so if it's paper or printed ad, then what you'll have to do is have that NMLS number listed on there. And it'll direct, and the NMLS number is interesting, because if a consumer goes to the NMLS, Consumer Access, you can pull up information on that entity that's licensed, and it'll tell you all the states that they've been licensed in, disciplinary action, and it's going to have a link to the Department of Banking and Finance. You can click on that link, and it's going to take you to our to our website, where you can make complaints and reach out to us otherwise. Currently, so for print ads, there's a requirement that it says Georgia residential mortgage licensee. So it doesn't even have to say you're regulated by the Department of Banking and Finance. So to me, I would think most consumers don't even know that there's a Department of Banking and Finance. Right? They don't, let alone if I say Georgia residential mortgage licensee. So I don't think that's very instructive. But what the intent would be at the end of the spoken ads on that there would be, an NMLS licensee, Nationwide Multi-State Licensing System and Registry, and hopefully that'll be a trigger for consumers to know, hey, I can go to NMLS, and then I can figure out if this company's legitimate, if there's been any concerns about this company, and if I need to, I can reach out to the banking department.
Well, I appreciate that, Mr. Chairman, but I'd like to make an amendment that we slow that ad down at the end so we can exactly know what we're getting into, because, I mean, we don't know what they're saying.
Well, you're right. I don't know. We're quite, we may be dealing with FCC or something. I don't know there. But we all feel your pain.
That's
Yes, ma'am.
Don't you think that most people, when they think it's licensed by the state of Georgia, that it's okay, that you've approved it, if you've licensed it? Just a normal person that you're living in South Georgia and you still think highly of the government.
Yeah, I would say that I think if a specific product is licensed by the state of Georgia, I would have a tendency to think, yes, the state has looked at it and blessed it. But just because of an entity or an individual has a license, I don't necessarily know if that means that they're okay. I think that it's portrayed that there is some level of oversight by the state of
Okay,
Georgia.
well, maybe I was just thinking just a normal person, you know, that
Right.
didn't go to law school.
Yeah, and I can't speak to that, but
No.
yeah, I mean, it does look like there has been some level of anyone, if you received a
approval.
license, there has been some level of
Of
approval. There is
approval.
some level of vetting, right?
Okay,
Yep.
thank you.
You know, obviously, we know there's bad actors in every space, in every industry, and that's what the Department of Banking and Finance is. A lot of the intent of this is being able to react more quickly to protect consumers in Georgia. So with that being said, that's a overview. I'm happy to ask any more detailed questions. Otherwise, ask for your favorable consideration and passage of this housekeeping bill.
Chairman Houston.
One other question, section 6, when you're talking about such representative's office, does that mean a bank? A representative office, is that a bank?
Yeah, you go ahead and answer.
So a representative office is an office that's run by a bank. So if you think, typically banks have branches, right, where they
Uh-huh.
can take deposits, make loans.
Yeah.
Representative office, deposit production office, loan production office, trust production office, where they can try to solicit deposits, solicit loans, solicit kind of fiduciary activities, but they can't engage in them. So it's really sort of a business generating office.
Okay, I just wasn't familiar with that term. I was just wanting
Yes,
some
ma'am.
clarification about what you meant by a representative's office. Okay. Now, another thing, if you open a branch out of state, we don't have any oversight over it, do we?
If a state chartered bank, Georgia State Chartered Bank opens a branch in Florida, we have oversight over that branch. We do. Now, if a Florida State Chartered Bank opens up a branch in Georgia, we do not have oversight of that Florida branch. Does that make sense? Do you want me to say it again?
Yeah.
Try it again? Okay. So if the Georgia Department of Banking and Finance, if we charter a bank, let's take Synovus, for example, and Synovus has a branch in Alabama and Florida, we still regulate those branches in Alabama and Florida. But let's take Regions, for example, in Alabama. They have multiple branches here in the state of Georgia. We do not regulate those branches in
Okay.
those Regions
All
branches.
right, thank you.
Just a point of order, who are they chartered by? Do they have national charters? Regions, for
Regions
example.
is chartered by the state of Alabama.
Okay.
Yeah.
And just to remind everybody, you know, when we lost SunTrust, we lost the state's largest state chartered bank. So our next largest right now is Synovus, and number 2 is United Community Bank out of Blairsville. Isn't that correct? So I continue to argue that it's very important for our financial institutions in Georgia, large and small, to have a robust Department of Banking and Finance. Otherwise, we're only dealing with regulators out of D.C., and I don't think that's, you go back to, you know, the government closest to the people. I think it's more important for the businesses of Georgia, especially being a big agricultural state that we are, that we continue to support, as the General Assembly, adequate funding and funding and cooperative attitude to keep our Department of Banking and Finance as strong as it's historically been. So that's my monologue about that. But again, happy to answer any more questions. And again, we do have, and it's the chairman's call, but we do have maybe one suggested tweak to the bill.
Representative Hawkins.
This really doesn't relate to your bill, I don't believe, but as I understand it, if a bank is operating in Georgia and chartered outside of this state, that our banking institution, your department has no regulations over them. Is that right?
That's correct. We do not regulate them. It's a matter of federal law. So Regions Bank, and it's especially like and I think the concept is like national banks, Bank of America, Wells Fargo.
Right.
We have no regulatory authority over them. And so it's same the state system.
Right.
We do not regulate regions. We
Right.
can't control their behavior. So Now, when I say that, the department doesn't regulate them. Now,
Right.
that does not mean that certain consumer protection laws would still apply to them. But, you know, we don't have the regulatory authority. We can't issue a cease and desist order. We can't issue a subpoena. We don't have that authority. And that's how it's treated throughout the United States.
Well, is that because banking regulations from state to state is almost analogous? In other words, parallel with each other, so we don't worry about it?
There are a lot of similarities. I'm not going to say that they're identical with it, but
Right.
there are substantial similarities. And I think that's the idea, is that you have one body who's coming in, who's looking at the performance of the institution, and the primary thing that you're looking from a bank regulatory standpoint, one of the primary things, is safety and soundness. Is it properly functioning? How's their capital? And that is what every regulator looks at from that perspective, on a safety and soundness perspective, is going to be the same thing. So you really don't lose anything. And so I think that is the rationale.
I assume if it was a problem, you would have already addressed it years ago, right?
Correct.
Right, okay. Thank you.
Any other questions for the author, Mr. Fears? Mr. Marion, did you want to be recognized?
Yes, sir. Are we going to amend? 'Cause I'm under a motion to do pass, but I think we have
Well-
some language that we need to change.
Well, we will start with the motion to do pass.
Okay, so Mr. Chair, I do the motion to pass House Bill 781.
Okay. Is there any further discussion with the bill? Well, now, if you have an amendment you would like to make, we'll discuss it. I mean,
Is that what
if
it-
you verbalize your amendment, then the committee can discuss it. Line 73. Hold on, let me get your microphone. What's your number again, Chairman? 26, okay.
I think he was looking at some way we could amend it. I really, it just doesn't sound right to me to let the banking department have full disclosure on forever and ever, amen, about who they can put on a board.
Well, we had talked about only U.S. citizens, but that's not your objection so much as you think, you know, the department's regulatory reach.
Well, you know, the way it was written, they could change residents in Georgia. Couldn't they change any of that, the way it's written? It'd be 75% of the directors have to be citizens of the United States.
And what line again are you on?
I was thinking 73 tells you that you can modify that in any way. They can modify subsection B. Is that not the way it reads?
Well, what 72 through 74 is doing is, yeah, it's broadening it because prior to it was special purpose banks. That the requirements could be modified, so, and I'm of, you know, the department may waive or modify the requirements of subsection B of this code section. So that does, go directly to the composition of the bank boards.
Yeah.
So we're not worried, you're not worried about the composition of the bank boards, you're worried about the expanding authority of the banking department.
Of the banking
to-
department. I'm not
say
concerned
that.
about having 75% of the directors be United States citizens, and or at least a majority. But what I am concerned about is expanding the authority of the banking department.
Well, and I'm not trying to, but the simple way of doing that would be just eliminating the elimination. What does the banking department say to that?
You know, that's fine. I think the concept was to allow our, I think this was requested by banks, because the idea they want to be able to bring in outside directors. Besides the fact they're multi-state institutions that want representation, I think a number of our banks have found that it's harder to find qualified directors post-Great Recession. A number of folks don't want to be sued by the FDIC in case the bank fails.
Well, you could change line 66
and what I was going to say is what a number of states have done, surrounding states, have eliminated the residency requirement. But again, I can't remember, but over half of the southeastern states have done away with that. So they'll still have a citizenship requirement, but they've eliminated the residency requirements. So that is also another consideration.
Over half of what banks?
Over half of the southeastern states, because we only looked at the southeastern states to see what they had done on the residency requirements, and they've struck those. And so again, the idea is we want to be able to let banks attract
Struck them for the state and as far as nationality?
Well, they've kept the citizenship requirements, but they've struck the state residency requirements.
Well,
So
could you change line 1 and just put a certain percentage of residents had to be from Georgia?
You could do that. I think if we were to, and I can't remember if it was North Carolina, but essentially most of them, if you look at line 64, it would be 75% of the directors shall be citizens of the United States, period, and then you would have the remainder of line 64 through 68 struck. That is an approach.
With the remainder of what struck, I'm sorry, I was.
So if you put a period after United States on line 64, and then you struck everything else out through the end of line 68. So then what you would have is your only residency requirement would be United States residency.
75% would be United States.
75%, correct, U.S.,
But-
and then no
but
other.
we want some of them Georgia citizens too, don't we? Yeah, we do. Thank you.
I wouldn't mind weighing in, just an observation on that. I think you get the desired effect, because if it's a Georgia domicile company, it's highly unlikely that there wouldn't be Georgia representation on the board. But if you think about it, we don't have limitations like this on any other company in Georgia. I mean, think about Coca-Cola Board of Directors. I don't
I know.
know
we
any
don't
of
have-
them,
We
but
don't have any Georgians left on the Coca-Cola Board of Directors. It's a good example. Didn't one left?
But it's all,
And,
as long as your spends are responsible to the, and we're not talking about credit unions now, we're just talking
I'm
about
talking about banks.
banks, that it's really the shareholders own it, and they're the ones electing these directors, and, I just, if we have so many, and we are the money center of the South, I don't care about Charlotte.
Well,
They're really kind of taking, over half the southeastern banks don't have this requirement. I'd be fine with removing that requirement. Just keep it 75% of the citizens of the United States. But that's just my humble opinion. I'm not going against you, Madam
What'd you say?
Chair. I'm not going to fight you over it.
No. Somebody else said their opinion. I know, being from a small town, you like to know who's on the bank board, so if you got a complaint, you can go to them.
Well, again, we've talked about two things. We've talked about the department's ability to waive
Yeah.
and then citizenship requirements, so.
Well, I don't know what's going to happen to I don't want to call any countries out, but I think there's a country that has some banks here, and I think they need some local, if they come to Georgia, I'd like a Georgia citizen on it.
Yeah, I would say that those banks, I mean, they have to have an ownership interest in a state chartered bank, right? So they'd have to have a change of control approved by the department, and we would have to review that. Now, if it's a bank that's got through there are banks that are foreign banks, but they are not a lot of them are not regulated by us, right? Because they go through the Federal Reserve and they have a sort of like a national charter. So whether or not we have this provision in here, that will not impact those institutions.
So those institutions can't buy other banks in Georgia.
Yes, they could buy other banks in Georgia, but again, our rules wouldn't apply to them because they've got sort of like even though they're an international bank, they have a license or a charter through the Federal Reserve, and so the federal laws are going to dictate and control over state laws. So we'd have a preemption issue here.
Maybe let's do a hypothetical.
Yes, sir.
What's a hypothetical that you would see the department exercising this ability to waive or modify this section B? I mean, what would that situation look like?
Sure.
Maybe that, the committee might get a better idea of what you're asking to do and why you would need it.
Yeah, I think I can see it playing out in two situations. One, we have a very large institution with a multi-state presence, and they want to kind of bring in representative board members from a number of states. So like when SunTrust, for example, was our chartered institution. You know, North Carolina does not have a residency requirement for its board members. Now, am I going to tell you that that is the reason that Truist decided to go with a North Carolina charter instead of a Georgia charter? Probably not, but I think that's probably something that probably weighed on that scale of things to move to a North Carolina charter. More importantly, I mean, where I view this is in the downturn, right, there were at least a couple of opportunities where there were some investors who wanted to put board members on a bank. But those board members, and they wanted to have more than the 50% requirement, but because of this limitation, they were not going to put their money in because they wanted to control that bank. And as a result, that investment money never came in, and those banks failed. So this is an example of a statute. I mean, and who knows? There were a lot of times in the crisis where there were a lot of people who came in on white horses and said, here, I've got money, I'm going to invest it in the bank and turn it around. And that never happened. But there were at least two groups that we met with that they did not put their money in because of that residency requirement. Or at least that's why they said they didn't put their money in.
Well, can you just, would the banking department have the right on line 64 to change the number of American citizens that could be on the board? So,
as I have read this, I think that we would, right? And that was not my intent, but I think it.
Well, how do we change that so you wouldn't have, you would always keep 75% of the people, directors on the board, Americans?
So,
Well, would you add to the bottom, and again, I'm not trying to interject myself into the, as long as 5% of directors are citizens of the United States, I mean, I don't know what, would that, if you added that language, would that be?
you could do that. I think there are a couple of ways potentially you could do it. One is you could say the department may waive or modify the requirements of subsection B1, which would tie directly into the reside in Georgia provision of this code section. Another potential, in addition to the one that you recommended, Chairman, you could say the department may waive or modify the requirements of subsection B of this code section related to the residency requirement in the state of Georgia. I mean, which is kind of really what we're kind of focused on.
Okay, I can go along with that as long as you. Am I the only one that Gloria and I the only one that have a problem with this?
Well, you got elected, you can make an amendment,
Yeah,
that's
I wanna
that's
make an
fine.
amendment.
I mean, we recognize
Yeah, I just
that.
didn't know if anybody else had concerns.
This is already,
Thank you.
All right,
Carl.
now why don't you, I mean, as far as that language, we got other people who have questions, maybe not related, so, just kind of think on Mr. Fear's remarks and see if that
All
suits
right,
you, and then
those
you would.
remarks suit me fine. If you got it written down, I make a motion that we, on line, I gotta get my glasses on. On line 72, that we can modify the things in subsection B1 and B2.
Okay, and that relates to Georgia residency.
And living 40 miles from the bank location.
You want both, okay.
I don't think if you can pull somebody from out of state, you can't have the 40 mile in there.
No, that's not what you want to say.
That's not what I want to
I
say.
don't think that's, I don't either.
We're gonna leave the thing in there on B, they can only modify B1 and B2.
Yeah, but you just want to say,
Right now,
related to the residency requirements on 72.
I think, Madam Chairman, the language
what
that
it
you
was.
were looking to add,
Okay.
and correct me if I'm wrong, would be in section 72 and 73, and I guess 74, the department may waive or modify the requirements of subsection B of this code section related to the residency requirements in the state of Georgia.
Okay,
Now, that was your original objection, and that
all right.
takes
Then what
care of your
about
objection.
residing within 40 miles of the bank location?
Mr. Fears, how
Yeah.
would you respond to that?
Yeah, I think we're okay, because if you look at 66, it says reside in Georgia or reside within 40 miles
Okay,
of
or, okay.
authorized.
Right.
So I think
Right.
we're okay.
So I
Okay.
think for your original objection, your original first question is, and again, I'm not trying to,
Oh, put it in my,
But I
put
think
words
it's-
in my mouth.
yeah.
Please, put words in my mouth and let's get on with this.
When you said related to the residency requirements in the state of Georgia, your original concern is addressed,
Yes, okay.
as I understood it.
Yeah, just so we keep
Okay.
75% of the people, of the directors, American citizens.
But it
Okay.
says majority, so that makes you 51%. Aren't you going to change the word majority if you're going to change?
No, I don't
one
want
and
to
two?
change majority, the whole, just leave that in there, I like that.
Okay,
Just leave,
okay. So
Okay.
it's got to be a minimum of 51. Okay.
yeah.
Just to make sure that I'm, as the author of the bill, that I'm clear on the intended change, do I hear you saying that in line 72, the language, the department may waive or modify the requirements of subsection B, after the B in parentheses, it would be B1,
No.
I'm sorry,
No.
No.
Well, that was said, but that's not
Just B.
what we just said.
of this code section related to the residency requirements in the state of Georgia.
Yes.
Okay.
I don't know, Representative Moore had a question. Is it related to this, or yeah, go ahead and ask your question. So we've got two amendments on the floor. We'll deal with the amendment first, if there's not any more. Go ahead, I'm sorry.
So, I know I'm kind of new to this proposal. I don't quite understand the citizenship and residency requirements, but I'm willing to work with you on this. I used to work in immigration law, and I help people apply for green cards. And by the time you obtain a green card and become a permanent resident of the United States, you are on your path to citizenship. So I just don't want those folks to be arbitrarily left out if their dream is to go into the banking world. So my request would be, what are your thoughts on adding, if we're going to keep a citizenship and residency requirement, if we could say that directors shall be citizens or permanent residents of the United States?
I'll let you, right now, there's room for 25, virtually right now, I asked aside, 100% of the directors of Georgia, we're talking about Georgia chartered banks, right now, 100% of all directors are citizens of the United States. We don't have any knowledge of anybody that's not a U.S.
I'm
citizen.
unaware of anyone who is a member of a bank board, a state chartered bank board, who is not a U.S. citizen.
Okay.
But there's room already in the code for non-citizens of the United States already, but 25%.
25% currently.
Which is, any given board, that's a number of seats available. So not trying to close any doors, but I think the door's wide open right now.
Okay. Thank you. It seems unnecessarily restrictive, but if this is what you want, then,
Well, that's actually current code.
yeah. Okay.
My whole idea, and I go back to say it one more time, is we build these multi-state banks where you're looking after depositors' money, and the board of directors has to fulfill their fiduciary duties, not only to protect the depositors, but deliver a return to the shareholders. It makes economic sense that they have reflections of the board of the communities they're serving. And I keep using the example of the Carolinas, it could be Texas, it could be Tennessee, or any other state in which they're already doing business. It just makes sense not to constrain the representation of the board just to the residency requirement of the state of Georgia. So I'm trying to be broad-minded there.
Thank you.
Okay. Representative Hawkins, did you want to
This
add
is a
something
general
else?
question. It can wait till after the amendments. Well, I can ask it now, whatever you want.
Go ahead and ask it now.
What percent are we talking about as far as bank-regulated banks in the state of Georgia, domiciled in Georgia?
I believe we have approximately, there's 130 state chartered banks, and then we have, how many national banks are domiciled here? Is it
There's about, Kevin Haber, Commissioner, I think 128 are state chartered banks that are operating in Georgia. There's about another 30 that are national banks. And then I think, Joe, you can help me out, another 30 or so out-of-state banks operating in Georgia. So 48. So the grand total is somewhere around 200.
So you're 2 to 1 in-state regulated banks? Okay. Because we have this in healthcare, the RISA exemptions, and it doesn't look this good. Okay, thanks.
Okay, I think, are there any further questions, general or otherwise, from the committee for either one of the witnesses? Okay, so we have 2 motions on the floor, one to do pass, and a motion to amend LC 500019. And the language to amend is line 72, the department may waive or modify the requirements of subsection B of this code section related to the residency requirements in the state of Georgia. That is the amendment that's before the committee. Is there any further discussion on the amendment? Do I have a motion on the amendment? On the amendment, we have a motion and a second. All in favor say aye. Aye. Any opposed, no. Okay, the amendment is passed. So now we are in the posture of voting for House Bill 781 as amended. We're going by the due pass committee substitute. We have a committee substitute to House Bill 781 is how they asked to have that. So, is there a motion on the substitute to House Bill 781? Motion. Motion to pass. Second. Any further discussion? All those in favor say aye. Aye. Any opposed, no. Okay, we have a committee substitute. Thank you, gentlemen, and thank you, committee, for your diligence in getting over here quick. Thank you very much.
Good job, man.
Sorry, I had to.
No, we're good.